Happy New Year, option traders. This is Sam the Trader Geek with your Sunday, January 4th, 2026 option trade review. We're back with you again, and we're taking a look at the trades we have open. We have about 17 of them open, and if you still have stuff that's not here, take a look at last week's action in case you were out for the last week and see that we closed a few trades. We opened a couple of new ones, but for the most part, we have about the same number of trades that we had on before the holidays. All right, let's start with Avago, where it comes first in the alphabet. And we have a put spread in here, and that expires in 12 days. Hard to believe we have another expiration coming up in 12 days, and that's a leap expiration as well. So a lot of heavy volume, more shenanigans to come. But we have a 320, 300 put spread. We are about $47 above the short strike, so we're in good territory. We already took one profit target on these, and it has come in a bit, so to speak. We've gotten a 65% profit target that we've claimed on our first one, and now we're down to about a 33% profit on the rest. So if you haven't taken any profits, you should reduce your exposure here. We'll see if Avago starts to catch up with the rest of the semiconductor trades. So we saw a nice day on Friday for semiconductors, although Avago closed below where it opened, hence the red candle, despite being up $1.52. MACD trying to flip positive, but we've got RSI middling, but still nothing to be concerned about here with Avago just yet. Having a really great day, first day of the year, our BA trade. This is another one that's in January, and I opted to take some more profits, but that's a solid candle. And hopefully you still have some of this and you're participating. You would have hit the next price target actually. Now 16.75, I see it here. It closed at 17.23. Beautiful trade for us. And I would say that if the strength follows through on Monday, first thing, I would be down to runners on this one. We've had great luck with it. It's a $20 wide spread, and we're at 222%. So what more can you ask for? So got lucky with that one. Not looking as hot is Costco. Tried MACD got positive, but looking to roll over again. We are up 37% on these. We already took one profit target at the halfway point, $3. Hopefully we don't come back, and we're only $10 from this last low at 844. So Costco in consolidation. We saw more profit taking on the first day of the year, but it's an 835. We're about $20 from the short strike, and this expires in about 12 days. I'll be keeping an eye on this, maybe roll it out again to give us more room. But Costco not being shown very much love. We got a bearish chandelier, but a bullish PSAR, and we are below the VWAP for this one. So Costco not having a good few months here in terms of showing some relative strength, but I am not worried about Costco as our stock, and I'm looking to add to positions if we get into the low to mid 80s, mid 800s. Google had a nice day on Friday. Well, not as good as it started out with, but a bit of a doji. Opened up at 317, closed at 315. We have a bull put spread here, 285, 270. Already took profit targets, and we're probably down to an area where we're going to probably have to roll this. I'm going to have to look for an expiration before earnings so that we can take advantage of the next leg higher, assuming it goes there. But Google looking good for us. We've got an 85% profit. It's probably time, and I'll be looking for a place to roll this. And if we get a little bit of tech weakness, that'll help us roll into strength. Now, here's what I'm a little bit disappointed with is Hormel. I mean, come on, after a year of the staples being hammered, start off the year down 30 cents. I mean, it's not that much, a little bit over 1.3%, but we've got 2027 combo. We sold a put and we use some of the proceeds to buy a call. I still like this play for the long term, and I'm not giving up on it now. So this is still something you can add to, or you can start a position in if you are not in it. I would start small. We need to see some evidence of strength, and so far we're not seeing them in the staples. So JD was very close to being cut on New Year's Eve, or I should say yeah, New Year's Eve. Got a nice gap up on Friday. Didn't hold all the strength, but it survived the cut, so to speak. We're down 4%. We didn't close at a 50% loss, so we're still in the game. This has only about 12 days to go, so we need it to get in gear. Otherwise, decay is going to set in quickly. But if the first day is any indication, we should see a little bit more strength and maybe get to our first profit target, which is basically a 50% profit target. So we are a little early, but still okay. J&J still clinging to the highs, although the MACD tells you that there's the momentum is kind of gone here on a daily basis. We took our profit target here. We're down to 30 cents. Here's another one where I'm going to look to see if it makes sense to roll this out or close this out. We sold it for $1.25. It's worth about 31 cents. You should be out of 1/3 to 1/2 of these by now. And we're 12 bucks away from the short strike. So we're have a lot of cushion here. And with a stock like J&J, $12 is quite a bit of cushion, although you just never know sometimes with these stocks. Now, one that hasn't really shown us any real love is KMB, but it's starting to perk up. So I still like this a lot. I'd love to put on a call spread in this one, but the spreads aren't great, and I'd like to see some definitely, high volume day to the upside to show that there's some accumulation in here. We're below the 50-day, we're below the 21-day. So they're not buying the Kleenex yet or the diapers, but it's nice to be back in the green on here. I had a little doji on Friday, and even though staples were negative, it was up 51 cents. Lululemon, we have another bull put spread here. We're up about 5%. So after we put it on, it came in for a couple of days. But this is another January bull put spread, 200, 180, or about $10 above our short strike. And this is one that's definitely can move more than $10 in a day and get us quickly below our strike. But there's strength here. I don't like that the MACD is flipping negative. RSI is at 64, but we've got something that has support here, and we've got the 21 EMA right around the 202 level. We'll see what happens there. NVIDIA holding up pretty well. We are in our umpteenth month of NVIDIA either put sales or put spread. So this is kind of been a perennial role for us and making money on the put side. Haven't really done any call spreads or covered calls in this in a while, but the put side has been paying us pretty well, and we just haven't really gotten a nice oversold condition to buy into in NVIDIA. So this is the way we're playing it, and it looks good. If you get to 70 cents on these 175, 155 put spreads, be sure to take 1/3 to 1/2 off. Oracle, still not getting broad support even Friday. gaining a whopping 80 cents. But we sold these for about two and a quarter, these put spreads, and we're looking to take 55% out of them for our first target, 95 cents. We're at $1.37. MACD is positive, which is a good thing, but the RSI is kind of middling. Again, this is a put spread. Now, one that's kind of disappointing me is Pepsi. We have a 140 put sale in January, and um, after showing some relative strength in the staple, sector is starting to show some weakness. So we've got a bearish chandelier, bearish PSAR. If I see more weakness and a close below the 200-day, the red line here, I'm going to just close this one off. This is our second bite at the apple. We had one in December and it worked out pretty well. And hopefully we don't give back our gains on that one. But so far, it's done nothing wrong, but it's just not trending in the right direction right now. And um, sometimes these things can get out of hand. We'll see. Now, here's another one that is been a victim of profit taking in the new year, and we have a 175, 150 put spread. So we are a bit in the money on this one so far, and I want to give it a little bit of time. I put a stop here, a closing stop at the 165 level, though I may lower that a little bit, probably to the 163 level uh, to the support level. Don't be so quick to write this one off. Again, year end, start of year profit taking. We'll see what happens with PLTR. We'll probably end up rolling this out and down if we don't see any signs of strength. And hopefully, you're not too big in this one because they really pounded it on Friday on high volume. So um, this is another one where we've been doing these for months and it's been working out. And so finally, we're seeing some serious profit taking, but I'm not worried about this one at all. Rocket Lab, doing what its namesake says it is. And we've taken a couple of profit targets and we're heading for our third. So this one, like I said, I'm going to try to be a little bit more slow the roll down with taking profits on these long-term plays because this one goes out to 2027 and we may have to just reposition since we are above our short strike. We have the 40-70 call spread and we are at $76. So um, considering what to do here because we're never going to really close this $20 wide, $30 widespread unless we get significantly above 80 or 90. But so far, we'll stick with what we got and let this ride for a while. SPY, in case you weren't here on Friday, we did close our call spread in January, and what we have left is our March put spread, and that is a longer term hedge. We're down about 40% on these, and we'll see where we get if whether we need to reposition or add to this. If we take a look at the puts that we have or the put spread that we have, let's take a look at the March. We have the 660. So yeah, it's a 30 delta. It's still pretty much in range, 660, 600 put spread. So you could even add to it, but I'd probably look to something closer to the money if I wanted to add or initiate a position. Say I would do the 675, say 650 or five and a quarter if you needed a hedge and you wanted to add to it. But the one we have is perfectly fine. If the market is going to turn bearish, then these will work out just fine for us. So far, we're down 40%, but that can change very quickly if the market sees some bearishness. Now, TLT, making lower highs and lower lows, but again, this is still in the range it's been in for at least uh, going back 2 years. We have a short 86 put in February. It is still out of the money, so we're okay. We're up 5% on it, but definitely long bonds are not showing much strength at all. And we've been rolling these, or not rolling these, repeating this play month after month for about 15 months now, and it's been working out. So it's nice when an instrument goes sideways and to sell puts on it. Last but not least, we have the XLP, and we've got a doji, and on Friday, couldn't hurdle that 80 level. We have the long 80 calls that expire in more than a year, 15 January of 2027. So plenty of time. I still like this for the long term, and it's something that you could add to if you want to, or initiate a position on them. I still like it as a long-term play. Can't say for sure when the staples will start doing their thing, but eventually they get too cheap, and I think they are too cheap to ignore. And we might see some of that money coming back in here if the market starts to discount any type of recession or slowdown in the economy. In any case, those are our 17 trades, and a lot of these, as you can see, will expire in the next 2 weeks on Friday, the 16th of January, when we have leap expiration. Be back with you again tomorrow in the trading room. And we have our first New Year's webinar on Thursday. Just note that the time has changed. It will be at 4:30 Eastern time, and that's 1:30 Pacific, 3:30 Central, 2:30 Mountain, if you will. So make a note of that. So it's going to be a different time. Hope you'll join me. And if you have any questions, Trader Geek Sam in the forum or at Trader Geek on Twitter, give me a follow. Otherwise, enjoy the rest of your Sunday. Thanks for watching, and I will see you in the room tomorrow. Bye bye.